All right, everyone, here we are with ticker symbol ZOM, Zomedica Corp. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to stay tuned on in towards the end of this video. We are going to talk about the S&P 500 index and also how the treasury bond yields have had an effect on the S&P 500 and the overall market, and what could it mean moving forward. So stay tuned for more information. So let's look here at Zomedica. And also, I forgot almost, we're going to talk about the tweet of the day. So I look forward to having you guys check that out, and I look forward to seeing your guys' comments. So Zomedica has had a drop, broke through support. The overall market was going down, and it's been very rocky the last few days, but we're back into bearish territory. So right now, things are getting a little bit much more rocky for the stock, even though the anticipation is here. We're in the month of March. Truforma, right? The big deal, the big stuff, the medical device that everyone's been waiting for, and the big opportunity for Zomedica's market share in that sector and area of this medical device. And it's pulling downwards, right? You would think that this is just a stock that's going to run up, but the market itself is making things much more difficult, especially for stocks that want to take off. We need to see what's going to go on the next coming weeks, because if the market continues this rocky going into the Truforma medical device launch, it could actually either postpone or die down the fire that's been lit here to take this up to newer highs. So that is something to keep in mind. So the 50-day moving average is 213. Anything below it is bearish. Anything above it is bullish. Our support is 197. If that gets broken through, you definitely want to watch this carefully, because this could be on its way down to newer lows, getting deeper into bearish territory and pulling away from the 50-day moving average. So keep that in mind. Our resistance is 206. Needs to be broken through by the bulls and turn into a support. But I do want to emphasize that if it gets broken through, it does not signify or guarantee that the bulls have gained control. They need to break through 213 and then their next resistance level in bullish territory, which is 216, to reach newer highs, new resistance levels, and get deeper into bullish territory. So 206 is the starting point, and it's an indicator for us investors to know where this is heading, but it is not a guarantee, or it does not signify that the bulls are guaranteed to cross the 50-day moving average and that they're already on their way to bullish territory. This is just a stepping stone, one step closer. So 206, yes, needs to be broken through, but does not signify that the bulls have gained control. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned to the end, because I have a lot of information to cover with you guys about the S&P 500 index that I do not want you guys to miss. You definitely want to be aware of what's going on and why the S&P 500 index is going downwards and the overall market. So for everyone that has made it to this point in the video, I'm going to talk about the S&P 500 index and why the market is down and why it continues to pull down and struggle to stay up, okay? I want us to be aware of this, and it has a lot to do with the 10-year treasury. So let's jump into the tweet of the day, and we're going to jump back into the S&P 500 index and also 10-year treasury. I usually talk about individual stocks to add to your watch list, but right now I believe there's so much more value in being aware of this than an individual stock. Now, if you want to know live updates on 10 plus ticker symbols that I've already shared with everyone in the last 2 weeks, and there's many more to come, you can join us over at the Patreon. The link will be down below in the description, and you will know live updates on what I'm watching and what attracted me to it. So the tweet of the day is: institutional investors buy a stock. It makes a bold statement about the stock and the institution's outlook on the stock. This is why I like to know what institutional investors are buying or looking at, because it just makes a bold statement of the company and it makes a bold statement on what they see moving forward. Who is your favorite institutional investor to watch? That's my question to everyone, and I'm thankful for the one person that commented, and they stated it was ARK. Who is your favorite? Comment down below in the comment section who is your favorite, and if you don't have a favorite, you need to find one. And if your favorite is ARK, I really want to encourage every single investor and viewer to find another one. Not just ARK. ARK is great, ARK is growing, but ARK is really small compared to some of the largest institutional investors out there that have a track record for the last 20, 30, 40, 50, even century of years. Like it reaches up to a century. They've been around for so long in the last decades and even up to the last century. So definitely do some research on that. But if you do have one other than ARK Invest, I would love to see you talk about it or comment down below who they are. So let's talk about the Treasury yield. So the Treasury yield, as I've been looking at it, and I did the beginning of this video, it was sitting at around 1.46, almost 1.45 as I was looking at it today, and 1.46 in the last several minutes. I mean, this was literally 20 minutes ago before I started doing the video. I was looking at it and it's already jumped up to 1.48. When we zoom out to the 1 month, it's gone up from 1.13 all the way up to 1.48. And when you do the 3 month, it was below 1.0 and we're almost double, right? Almost, not there yet. And the 6 month, you go back down to 0.6, and then year to date, and then the 1 year, the lowest that we've seen at 0.5 in the history of the 10-year Treasury. And when you go all the way to all, the highest was up here at 15%, and all it's been doing is going down. This has been the turnaround, and it's making a lot of investors uncomfortable. As long as this doesn't pass 3%, I believe, in my opinion, based off the history of this, it could go back to a healthy consolidation. And if it stays there or pulls back downwards, it could be even a healthier sign for a bullish market. But there's going to be a lot of rockiness and a lot of uncertainty as this continues to go up if it gets closer to 3% or 2%. Now, this is creating the wildness and the uncertainty in the market overall. And that is why we're pulling downwards. We need to see what's going on. I have the RSI pulled up here on the 30-minute, and this is an oversold area. This could bounce back up, and we could see something like this happen, bring itself back up, kind of level off, and then Friday bring itself back up a little bit, and then all of a sudden we pull back down in the near future going into next week or the next several weeks, especially if this continues to go upwards. This is something to watch carefully. It's the 10-year Treasury, right? That's what you want to go ahead and search, and it's at 1.4. It's supposed to show a percentage. As long as this stays below 1.5, 1.6, I shouldn't see the S&P 500 falling drastically. But if this continues to go upwards in such a quick spike like we're seeing it, it's going to create some uncertainty and rockiness in the market. So I do want every single investor and viewer to be aware of this. We need to watch this, and hopefully, again, we are in a correction and not a crash, because the Treasury yields have hit the all-time lows. It's bouncing back, and what if all it does now is go back up to newer highs for the next 5 to 10, 20 years? You know what that can signify for the market? A long-term crash that a lot of investors, experts, billionaires, millionaires are talking about, and Bitcoin is hitting all-time highs. That right there has put a big question mark, in my opinion, on what's going on. I just want to be aware, and it's very important to not be caught by surprise, but I want this to be more of a correction than a crash, and that we can continue to grow exponentially and see a bullish market continue with corrections that are healthy. No crash and no long-term crash, because what would happen is what a lot of experts say, and this is just a quick drawing, Don't use the numbers on the side. Imagine that this was the peak up here and we fall all the way down, and then the market's just going to sit like this, sideways. We hit a big crash and it's just an L-shape recovery, and then it's going to take some time before, years before that starts going back up slowly. And that would be one of the longest crashes that we've ever been in the history of crashes. I hope I'm wrong. I hope that I'm just thinking this and that all of those experts and billionaires are incorrect, and that we can go ahead and hopefully have this priced in somehow into the market, and that worst case scenario, this goes up to 2-3%. The market gets adjusted to it, we get used to it, and we continue, because we were growing even when it was at 2, even 3%. We were a growing economy, and the S&P 500 index was growing. So hopefully we can handle this and not get too crazy. But the one thing I'm watching right now more than ever is institutional investors. While all retail investors are scrambling around, they are focused and they're executing orders, and large ones, on specific stocks. As always, guys, thank you guys so much for watching, and let's make some money.